I'd like to call the meeting to order and acknowledge that we are in Treaty 1 territory, the home and traditional lands of the Anishinaabe, Ojibwe, Innu, Cree, and Dakota peoples, and in the national homeland of the Red River Métis. Our drinking water comes from Shoal Lake 40 First Nation in Treaty 3 territory. My name is Robert Hutchings. I'll be chairing the hearing today. I'm joined on the panel by Gail Anderson and Diane Knight. Representing the Assessment Department, City of Winnipeg, is Jennifer Martins, and our administrative personnel is Jaswinder Kumar. To the Zoom participants of the hearing, please note you are placed in the waiting room until your property is called upon. When it is your turn, you will be admitted into the hearing. Kindly follow along in the City of Winnipeg's Board of Revision YouTube channel for the hearing process. Once the host admits you into the hearing, please close or mute your YouTube player. You will then be permitted to speak with respect to your property. Once your hearing has concluded, you can leave the meeting. We will be hearing applications for revision of the assessment roll in accordance with the Municipal Assessment Act. The matters for which revision is requested have been described in each application, and we will limit discussion to those matters. The statements that are made at this hearing are sworn testimony, and anyone speaking to the matters must be sworn in. Be advised that comparisons of assessments of properties are not considered evidence of market value by this Board of Revision. The Board of Revision is appointed annually by Council and is independent of it and the City Administration. It makes its decisions on the basis of the evidence presented at this hearing and issues a written order that will be mailed to all parties as soon as possible. Please note that the board's decisions with respect to an application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to the Court of Queen's Bench if the matter pertains to the application of exemptions from taxation. Should you wish to appeal, information on how to do so will be included with this board's order. With respect to the hearing process, I will confirm the points of appeal with your property to be addressed with each applicant following their swearing in. We will then have the assessor's testimony followed by questions that the applicant may have, and then the applicant's testimony followed by questions. Each side will have an opportunity to summarize if they wish. Once all the evidence about an application has been brought forward, the applicant may leave. The process will repeat for each item on the docket today. The session will close after all the applications have been heard, and the board will deliberate in private and make its decisions based on the evidence presented here today. You will receive the board's decision by registered mail as soon as possible. As information, all public hearings are live streamed, recorded, and will be part of the public record. Today, we will be hearing items 1, 2, 3, 4, and 5 on our docket today. Mr. Kumar, please affirm the assessor's and the applicant's testimony.
Yes, Mr. Chair. Thank you. Madam Assessor, please state your full name.
Jennifer Suzanne Martins.
Thank you. Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Mr. Applicant, please state your full name.
Rocky Neufeld.
Thank you. Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
Thank you, Mr. Kumar. Good afternoon, Ms. Martins and Mr. Neufeld. First property on the docket today, item number 1, is 1340 Sargent Avenue. We're dealing with a 2023 realty assessment, and my understanding there is no outstanding issues to deal with. Is that right? To the assessor and the applicant? Mr. Neufeld, no outstanding issues to deal with?
No, I do not believe so.
Okay, thank you. All right, Ms. Martins, when you're ready, please proceed. 1340 Sargent Avenue.
This is roll number 13000845000, 1340 Sargent Avenue. The reference date is April 1st, 2021, and the assessed value is $4,871,000. We've got this being a commercial retail warehouse center. And if we look on page 2, we have 2 subject property leases. one being for $7.95 and one being for $11. On page 4, we have our income workup. It shows the leasable area as 58,892 square feet with a potential rent of $379,987. We have the vacancy at 4% and the expenses at 3% with a $6.50 per square foot shortfall, giving us an NOI of $338,532. We have a capitalization rate of 6.95%, giving us the value of $4,871,000. We do have a mailer on this one, and there are, on page 12 of my brief, we have some pictures. We have a map showing the location on Sargent between Empress and St. James. We have an overhead view of the property and a street side view of the property. Thank you.
Thank you, Ms. Martins. Mr. Neufeld, any questions of the assessor's evidence presented?
Yes, I have a few. This category of retail warehouse, what sort of properties get put in there?
Properties that are more, that have larger square footage, and usually properties that have like a bigger space that are more like a warehouse store.
Well, for example, Costco, is that the sort of property that gets put in here, this category?
It's one of them, yes.
Okay. And have you been in this property?
No, I have not.
So you're not familiar with the operations that are done in this property?
No.
And is it not more common for a retail warehouse to have a high ceiling?
You know what? I haven't looked at the at all of the properties that we have as retail warehouse, so I'm not familiar with what the percentage are that have high ceilings and don't.
Okay, but the subject property, you have it listed at 14 to 20 feet, and I take it that those are exterior measurements.
I'm guessing, yes.
Okay, so clear space, can we then assume is between 11 and 17 feet, accounting for 3 feet of truss?
As I said, Rocky, I haven't been in this property, so I'm not sure of what the measurements were that were put into the system, and I'm not comfortable saying that I know.
Okay. No, that's fine. That's fine.
So if that's part of yours, then you can present that.
I was just comparing it to a very high cube Costco warehouse and wondering, if there was an adjustment for wall height for this property.
As I said, I'm not sure. Like, yes, Costco type properties are in here, but also like there's other types of there's properties that are in here. It's more of the like square footage of the space. Yes, in this type of property, a higher ceiling height would be beneficial, but I'm not sure that that's the case in all of the ones that we are using as comparable properties for this.
Your sale you've listed is quite old. Are you familiar with the sale?
No, nope.
You're not aware that it was a portfolio sale of I'm just trying to remember the name of the REIT that sold it, that they sold all of them at once. Oh, well, of course, it hasn't changed its name. H-REIT purchased it from Huntington REIT. Okay. On page 2, you list leases. You are aware that the owner is one of the tenants, Cunningham Business Interiors?
Yes.
And they, as the reported there and also in their mailer, page 9, they have leasable space of 41,000 I'll get you the number, 42,092 square feet. Is that correct?
Sorry, which page did you say that they listed that?
On page 2, as well as page 9, that the owner says that is 42,092 square feet of leasable area.
Well, it looks like we've got a difference of opinion in square footage.
Well,
Okay, the plan area is 42,217.
Sorry, a difference of opinion would be on a lease amount, but a difference of opinion on area is easily resolved by a measuring tape, isn't it?
Well, that would be delightful. Why don't we go down there and do that? Oh, maybe not today.
Okay. But I take it that the assessment department is not disagreeing with the 42,092 square feet, because that's the same number you have. Is that not correct for the 2 above grade areas?
See, with mine, I also have a substandard basement amount. So
No, I just meant the first 2 entries there, premise and IDs, they do equal what the owner is claiming, do they not?
I either need a few minutes with the calculator, or you can just say that's what that.
I added them up, they're the same.
Perfect.
Okay, now, and you said you haven't been in the building, so you haven't looked at the basement?
No, I have not.
And what are the requirements to determine whether or not it's leasable space or not?
For the basement?
Yeah.
Well, we consider it a substandard basement, and I have not been in there, so I'm not sure what the basement looks like, or what the features are, or what one of my colleagues has determined to be as being reasonable for being included in the.
Well, I mean, do you know the height of the basement?
No,
Okay, and is it separately demised?
I don't know.
Is it have an occupancy permit for human usage?
I don't know.
Okay. And this has just been what, historically on the record, and no one's bothered to investigate, or can you answer that? No.
Well, as I stated, I haven't looked into it. I think that it's really glib to say that it's just historically on there and nobody has bothered to look at it. Just because I'm not aware of what has gone on in the past couple of years with this property doesn't mean that they were just, so I don't know what you're getting at. And
I don't know what I'm getting at. I just want to know if anyone's looked into it.
So I don't know, Rocky.
Okay. All right. Sorry, I was just trying to find something else here on it.
Like, do you want me to go searching through the computer to find notes on it, or?
No. I just asked what you knew about it. Now, while I was asking you, I was just looking to see if there was an actual occupancy permit on it, and nothing came up. So I think that answers my question about no one's looked at this for quite some time. And the original age being 1953, is the 1953 section the one with the basement? Do you know that?
I don't know.
Okay. In regard to page 4, then was this all prepared by the model?
Yes.
I think we missed your answer there.
Yes.
Thank
It
you.
was,
And do you know, for example, in the model, what the where the break lines are or dividing lines are for when it it changes. I've been told that it accounts for age and condition and location. Do you know any of those breakpoints where it would change?
Not off the top of my head.
So I'm just curious, if you have a building that was one part's built in 1953 and the other one in 1969, why 1969 was the date chosen, number one, and number two, would there be a difference?
Mr. Neufeld, she says she doesn't know. Can we proceed, please?
It was a slightly different question. And let me just think if it's still pertinent then. Okay, then I'll just rephrase that. Forgetting about your capitalization rate computations, why was the effective year chosen at 1969 when clearly over half the building is older?
That wasn't part of what I did for at this for the hearing, so I'm not sure, Rocky.
Okay, thank you. I think that's it. Yeah, those. Yeah, actually, I did have one more question. I'm just reading the COVID questionnaire, and I note that on page 10 that rent reductions were granted. And was this taken into account in the preparation of the roll?
We took a lot of the issues of COVID into consideration in the preparation of the roll. We did not, as usual, we did not take the individual income and expense statements.
Okay. So, but if I read this correctly, the owner is claiming that his net operating income is approximately 342,000 as full, but yet he gave away 22,000 in rent. So that wasn't taken into account.
We don't take individual income and expense questionnaire information into account and apply individually to individual properties. It was that type of information was taken into account in assisting us in figuring out how to apply as mass appraisal.
Those are my questions. Thank you.
Thank you. Diane, any questions of the assessor?
You're mute, Mr. Noy.
Yeah, sorry. Yes, no, I have no questions.
Thank you. Gail, any questions of the assessor?
No, I have no questions. Thank you.
Thank you. My only question, Jennifer, is what is on page 4 on your workup, what is your blended rate, lease rate, please?
Blended rate would be $6.45.
Okay, thank you very much. That's my only question. Okay,
Sorry, I had a redirect. I would
Okay.
just like to know the blended rate on the upper level rent. I'm not hearing anything. I don't, was anything said?
Nothing. I just need a moment to map it out. I didn't have this calculated beforehand, Rocky. $8.28.
Thank you. Okay, Mr. Neufeld, bear with us 1 second before we get your presentation, please. Does everybody have it?
You,
Yeah, you're good? Okay. Okay, Mr. Neufeld, please proceed.
Thank you. So the obviously you note that the issues we have concerns with, first of all, the rental rate difference is on a smaller side. And the assessor on the upper level is at 828 and we are at 795. We came to the 795 a couple of reasons. There is MCO, that's what they're paying. Now that's the superior space in the newer building. The owner has the inferior space in the older building, and we put the same rate on it because in the prior to him taking the space back, it was leased to I've forgotten her name, but they were paying $745. So and that was an older lease, and so we just applied the same rate to both portions of the building, the owners and MCO. The major issue is that the basement is not rentable. It's a accessory space. I don't know if anyone here has been in it back in the day when it was a plumbing supply house. I have been. It has a sub 6 foot clearance in the basement. So it's not rentable space. It's accessory space, and it does not meet anybody's definition of rentable space. I believe, and I'm pretty sure I can say this, is that this property has gone through municipal board, and there was agreement on this principle in the determination of the case management agreement that the basement should not be considered rentable. So I'm just surprised that it's back in the mix again. The property itself, other than that, we have some minor differences on the concept of vacancy. What we looked at it was through the Johnson report, and that report is listed beginning on page 9. And you can see that the data for the report is included right after. I don't know why it's all office here. It's not office. Okay, so the data is incorrect. We did have a summary of the data, which is on page 9, showing the various rates. And this is, I'm not going to disagree that it's has a retail orientation. It's just really inferior. Yeah, I believe that's the point I was getting at with the low ceilings. And so you would be looking at a retail rate. And our calculation on this is just based on, we try to get a picture of the city and the region. So we take the overall Winnipeg rate and then look at the St. James rate and apply the mean, in this case, a minor difference from what the assessor has. The goal here isn't to nitpick and look for little things, but it's to be honest and true to the property type and not be a model. Is to look at the market, and you can't cherry pick and say, oh, I like your report for this or for that. That's not the case. And where that comes into effect is if you look at our shortfall rate, it is lower than what the city has because the properties are low-class property. The expenses aren't as high. So we, again, are just being true and honest to the property type. As far as non-recoverables are concerned, again, the concept that they don't exist is incorrect. Just to show you support for what we've been working on, beginning on page 42 and on page 43, are Collier's managed properties. And I'm doing this chart myself, and I got stuck at 2025. I've got more to put on here, another 2 pages. And all I did was I took the income, I put a minor modification of 5% on it to account for vacancy, just so we're talking apples to apples here, because it's always calculated post vacancy rate. And put in the non-recoverables and then reported a percentage. Now, the percentage I reported is 13.33. The median is actually 8%, and the median is far more important. What this demonstrates, and I know some members of the board have heard my story before, some have not, but it shows that these non-recoverables vary by year, and they vary by the experience of the building. And a great example on page 42 is about halfway down the page is 200 Portage, which is an office building. So one year the non-recoverables were 0.56%, the next year 33%, and then 33%, and then 1.07%. And that's an honest picture of what happens in investment properties. That's a vacancy year. And in the vacancy year, you have additional costs. You've got leasing costs and code upgrade costs, not TIs, not improvements, but just you got to fix stuff up for people who are moving in. And these are all non-recoverables. There's no one to get them from. And so in the appraisal world, what we do is we said, well, it can be 33% one year, it could be 1% the next year. We have to put an allowance in to stabilize it for every year. And that's why these must be included. We use a rate of 5%, which was the former city rate in 2018. And then 2% for structural reserve, which of course was always in the past as well at 2%. Structural reserve is an allowance for, again, non-recoverables, items that the landlord typically has to fix and to retain his tenants. And the biggest one is always the roof. If you calculate a 20-year life of a roof and amortize it over that period, that's pretty much what the number is going to be. And every appraisal is written that way, because the bottom line is this stuff isn't free. Someone pays for it. And if the tenant doesn't pay for it, then it comes out of the earnings of the property, which means that the investors do not get that return. And what we care about in the NOI and the cap is how much does the investor earn. That's what the rate's all about. It's not some hypothetical number that we can manufacture. It's follow the money. And that's why we're trying to be very true to the world. Now, our cap on this was 7.5, and I think that the issues on this are obvious. I mean, Sargent isn't the best location. This is an area that was predominantly industrial in years past, and it does have more retail development, but the building isn't great. It's not keeping pace with it. It is, the 1969 building is an old wood framed warehouse style, and the new one is a steel framed warehouse. These aren't high class, good quality retail, not even big box retail. They're just inferior. And as a result, you're going to get a lesser interest. So taking all that into account, our number is capped at 7.5%, and with a total value of $3,740,000. And again, the differences, major differences, basement space, minor differences, the rent, the cap, non-recoverables. Thank you.
Thank you, Mr. Neufeld. Ms. Martins, any questions of Mr. Neufeld?
Just one. So with your information with the Johnson report and how you're figuring out the math of how to find a reasonable vacancy percentage and everything, like, are you essentially just creating your own model to use?
No, I think it's just more of what we I get. That's a semantic question. That's awfully a basic. I think every time we would do an appraisal for any reason whatsoever, we would likely approach this the same way. Look at the market indicators, figure where it belongs mostly, and by year and by type, and is it, and the way we're concerned here is conformity to the neighborhood and to the base. So I think personally, I would probably be focusing on the St. James mean more than I would the city mean. To a degree, your question is yes. To a degree, it's not. I don't know of a better answer.
Okay, that's everything. Thank you.
Thank you. Diane, any questions of the appellant?
I do not have any questions, thanks.
Thank you. Gail, any questions?
No, I don't. Thank you.
And I have no questions either. Any requirement for summary by either pardon me?
No.
Mr. Neufeld, Ms. Martins? No? Okay, that concludes 1340 Sergeant Avenue. Next property on the docket is 2512 Main Street. Ms. Martins, bear with us a second, please. Dealing with 2512 Main Street, dealing with a 2023 realty assessment and no outstanding issues on this property. Ms. Martins, when you're ready, please.
Thank you. This is roll number 050094245155, 2512 Main Street. For the reference date of April 1st, 2021, the assessed value is $5,282,000. This is again a commercial retail warehouse. It was built in 2009 with a wall height of 20 feet. We have a plan area of 17,800 square feet. If we look on page 2, we have a subject property lease with the Shoppers, and the rent that we've got on this is $21.50 per square foot. And if we look on page 4, we have the income workup. For the full space, the 17,800 square feet, we have applied a rent of $19.56. So we get a potential rent of $348,168. We've got a 4% vacancy on that, 3% expenses, and $6.50 per square foot for a shortfall rate, giving us an NOI of $319,586. We have a capitalization rate of 6.05%, giving us our $5,282,000. We do have pictures on the back page on page 12. And again, it's an overhead map showing that this is on Main Street near Red River Boulevard. And we've got an overhead view of the property. And we do have a street view. Thank you.
Thank you, Ms. Martins. Mr. Neufeld, any questions of the assessor?
Just 1 second. I was looking at the wrong report when she was going through it. So I'm just a couple seconds to catch up here. Okay. I was looking. Did you have an aerial view of this?
Yes, on page 12.
That?
On the last page, page 12.
Okay. Oh, I see it now. So this is an irregular lot, correct?
Yes, yes.
And page your workup page 5 or 4 and 5 just confirm that this was all based on the model.
Yes.
And on in that regard, I'm just looking at the shortfall was, I think it was $6. Is that correct?
$6.50.
50. Now, in their return to you, they're reporting expenses of it's 151,013. So that my calculation is that's about 848 a square foot. So that what I guess my question is that you're applying a shortfall that is lower than their actual costs of maintaining, are you not?
We're also applying it when there's no vacancy.
Well, sure, but the concept of a shortfall is an assumption that there's a vacancy as an allowance for maintaining that space. So based on that, why wouldn't it be considered the weight given by the actual cost of maintaining the building?
Because we don't take the actuals into account and apply them individually. This is not the simple appraisal. This is assessment that we do using a computer-assisted mass appraisal. So in mass appraisal, we don't tend to apply the individual properties information for the individual property.
That's a yeah, thank you. And this property is classed the same as the one we just last heard, 1340 Sargent, as a retail warehouse.
Yes.
And in
Yes,
this
yes.
case, 20-foot height. Is that correct?
Yes.
Would these issues, wall height and age, do you know whether or not they're factored on the cap rate or anything about the cap rate?
I would assume, well, age is a factor in the cap rate. I'm not sure about wall height.
That was my question. Thank you.
Thank you. Gail, any questions of the assessor?
Just wondering if there has been a on-site inspection of this space.
I did not inspect this space.
Okay. Okay, thank you.
Thank you. Diane, any questions?
No questions at this time.
And I have no questions either. Mr. Neufeld, excuse me, bear with us a second until we pull up your report. Okay, Mr. Neufeld, I think we're all ready. I think regarding the 7% as opposed to 3 on the assessor, can we consider that your last presentation will be carried forward?
Yes, that's a good idea. And the same issue with the other costs. Just very briefly say that, you know, we are looking as closely as we can to the market. The vacancy varies a little bit from what the assessor has. We've mentioned that the shortfalls are actuals. The 7% is a necessary cost, and then essentially we're talking about a cap rate. And just for that, I would just refer you firstly to page 26. And this is the Collier's cap rate report. Now, the important point in this is we're moving along to page 28, is that in our recent overheated economic market, certain types of properties are not being faithful to the concept of a capitalization rate. A capitalization rate is as a rate of return, and the use for it is predominantly in the banking world to make sure you can substantiate and pay your mortgage. It's no different than a person buying a house, the bank asking them to qualify based on their income. And this is why we use the cap rate. So what Colliers has been trying to remind the world about is that it doesn't matter if someone tells you that he's got this really low cap rate. That's not a cap rate. That's an aberration or an anomaly, or based on future income potential or something that's going to happen afterwards, or in place income, rent the rent, the NOI, the cap rate have to match the property's ability to pay a mortgage. That's why it exists. Now, in our system, on page 29, we report cap rates in the retail range between 6 and 6.75%. And this was done Q1 2021. So as close as we could to the reference period. And then going back to the page 28, you can see at that rate, we still have the 4 basis point spread between interest rates, which is the key. And the Collier's Debt Advisory Service, page 33, further explains the importance of marrying your interest rates to your cap rates. You do not operate in isolation. Page 34 is the same graph that I had shown you earlier. And then at the bottom of 34 shows a bunch of other market trends, and they're comparing to the cap rate. And this is a return to common sense. Now, there is creative financing in the market. A lot of and it usually shows up in multifamily. Now, you could say we're not really that far apart in the cap rate, and it's moderately close. It's not as wild as some of the multifamily rates have been, but the indications are that it's a bit on the high side, on the low side, the assessment rate. Now, what we do when we calculate our cap rate, and again, is going back to page 2, is we have the Collier system, and for lack of a better word, it's a model, but it's a model that's done by professionals in the field, brokers and appraisers, and it's transparent. So if someone said to you, "What's this worth?" we can tell you what it's worth. Now, the issue in this property is the base rate is 6%. That's the best rate you're going to see, and that's roughly where the assessment model has placed this property. It doesn't take into account some of the differences. And firstly, on our page 2 is our Collier's cap rate model includes closing costs. We take in like the land transfer fee and the agent's commission, artificially inflates price upwards, which drives the cap rate downwards. This adjustment accounts for about 0.15 of a percentage point. So if the best rate was 6 for Collier's in the market, that is actually about 6.15 to relate it in the same language, apples to apples. Our major concern with this property is the single tenant nature of it. And especially during COVID, the failures of national single users was on the high side. And yesterday I had brought in properties, retail properties, multi-tenanted retail properties that, the units were 1,000, 2,000 square feet. So if you lost one of those units, because maybe
Mr. Neufeld, can we stick to the facts of the subject property, please?
this is an issue as far as cap rate.
Yeah, but referring.
I'm not going to talk about what yesterday was.
Okay.
I'm just
Okay.
saying you won't hear about it. But the point is, if you have a multiple unit retail site, and you have turnover in it, you lose one tenant, you might lose 15% of your income until you refill it. On a site like this, it's one tenant, and you lose it, you lose all the income. And that's the risk factor here. And this was especially apparent during COVID with the amount of failures of international national chains. So we think that in the marketplace that this would get a downwards rating, which results in a higher cap rate. We estimate it at 6.75%. And that's my presentation.
Thank you. Ms. Martins, any questions of Mr. Neufeld's presentation?
Yes. So we spoke earlier about the irregular of the property. Now, Rocky, are you aware of the owners of the two neighboring properties on the north side?
Yeah, yes, they've been clients for years and I was around when they subdivided it.
Okay, so the subdivision was, is this, are we talking about the subdivision and the shape of the property as being an issue, or can we just drop that? Because it was my understanding that the owner of the property is like aided in determining the lines.
Well, no, I couldn't find your picture. And I couldn't see it, so I was asking, where's the picture?
Okay,
And that was the purpose of that question. And sometimes I just ask a dumb question for a dumb reason. I couldn't find it.
okay, just checking.
No, and I'll answer your question. No, it was a larger parcel, and I think it was roughly 4 acres in total, the entire corner, with the exception of the Esso station and Mac's convenience store. And they ended up subdividing it into 4 parcels, actually. One for their bank, one for their office, one for shoppers, and then that little remnant piece to the south of there, which isn't shown in the picture, but it's a very irregular piece of land, and I think it's on the tax rolls at a few dollars because it's landlocked, and that was a remnant left over from that breakup.
Yeah.
No
Okay.
issue. They have cross access easements.
Now, quick question, how did you determine the rent of $19.56?
Well, we ended up relying on what the assessor had put on it. I've done work for shoppers in the past, and their deals are structured generally as cost recovery ones. So we knew what the actuals were. We knew they didn't really relate to all the shoppers in the city, and sometimes we just take the path of well, you know, our number probably would have been in and around 1950, and to agree with you is sometimes just convenient.
Okay, perfect. I like that.
And rare.
Rare. That's why I was wondering. Okay, now one more question about your about the cap rate being a single tenant in COVID times, adding to the risk. Did you factor in that this is a drugstore and perhaps one of the types of properties that was doing that wasn't struggling for COVID? Many people still were required to go to drugstores, and that they probably had like very high rate of being considered essential.
Absolutely not, because that would be valuing its use rather than its real estate. We were looking at the market in general, and you know, Bed Bath and Beyond is just as important as Shoppers Drug Mart is in determining what the market's going to be like. If we have a failure there, or we have a failure at any of the other big boxes that went down, it's going to put a negative impact on the entire market, because there's more product available, and it'll just drive down prices, which drives up the cap rate.
Okay, thank you. That's all my questions.
Thank you. Diane, any questions of the appellant?
Just to be sure that, Rocky, your issue is the cap rate 6.75 as opposed to 6.05. You agree on the rent, correct?
That's correct.
The vacancy rate 4.4 to 5.3, and then the shortfall difference. Is that correct?
Yeah, and we're not really. I mean, as I said earlier, the concept of the vacancy and the shortfall is a matter of consistency, and I don't deem them to be large factors. I think that the 5% non-recoverable and the cap rate are the main issues here.
Okay, thank you.
Thank you, Diane. Gail, any questions of Mr. Neufeld?
No, they've been answered already. Thank you.
Thank you. And I have no questions either. Any requirement for summary by either party?
No, thank you.
No, thank you.
You're good, Jennifer? Okay. That concludes 2512 Main Street. Next property on the docket is item number 3. And we're dealing with a 2023 realty assessment. Address is 1520 Regent Avenue West. And Ms. Martins, please bear with us while we pull up your brief. And no outstanding issues on this one is my understanding. So Ms. Martins, when you're ready, please.
This is roll number 090076410000, 1520 Regent Avenue West, with the reference date of April 1st, 2021. The assessed value is $5,083,000. This is again a commercial retail warehouse. It was built in 1985. The wall height is 22 feet. We have a plan area of 26,043 square feet. On page 4, we have the income workup with a rent of $14.22 per square foot for the entire 26,039 square feet. We get a potential rent of $370,275. We've applied a 4% vacancy and 3% expenses with a $6.50 per square foot shortfall, giving us an NOI of $338,030. We have an overall capitalization rate of 6.65%, giving us the $5,083,000. There is a picture on the last page, page 14. It shows the map where this is on Regent Avenue West at the corner of Rougeau. There's an overhead shot of it and a street view. Thank you.
Thank you, Ms. Martins. Mr. Neufeld, any questions of the assessor's evidence presented?
Are you on mute, Mr. Neufeld?
Page 4, this valuation was all done by the model.
Yes, it is.
And, oh, sorry, again, I'm looking at the wrong one here. Okay. I got confused again here. Did I have page 4 right here? Yes, I did. Okay. And do you have the actual rent that's being paid on this in your report?
I would have the one that's on the mailer that was supplied. Sorry, I'm just looking at the mailer.
That would be on your page 12.
Yes, $14.25 was reported on the mailer.
And that, when did that expire?
Lease ends in April of 2021.
033121, March 31st, 21, correct?
This says 040921.
What line are you looking at?
Oh, sorry. Yes. The step up at the bottom. Yes.
And this rent roll, of course, is dated December 31st, 2020, correct?
Yes.
Okay. And did you look to see what the new tenant was paying?
No, I did not. It's post-reference.
Well, you say it's post-reference. Do you know that it was negotiated post-reference?
No, I didn't look into information on the negotiations of post-reference information.
Okay. Well, I mean, you wouldn't negotiate a rent and move in the next day, would you?
No.
Okay. Now this, sorry, having problems today. This again is the same classification as before, commercial retail warehouse, correct?
Yes, it is.
And in this case, 22-foot wall height.
Yes.
I'm just curious about wall heights, locations, and ages. We've seen a difference in your applied rates between 6.05 and 6.65. Do we know which factors were important in driving this?
Well, if we look at the age of the properties, I believe the oldest one was it not 6.95?
Yes, I'm sorry. Yeah, 6.95. And
That one is in the middle and it's 6.65. And the last one, the Shoppers, is the newest and it was the lowest. So
okay.
I'm guessing that age does have a significant influence.
And I'm not looking to be provocative. Are you just assuming this, or do you know this?
Well, I know that they do take the age into account. So
Okay.
I'm not sure if they take the into account as I.
Okay. Those are my questions. Thanks.
Thank you, Mr. Neufeld. Gail, any questions of the assessor's evidence presented?
No, I have no questions. Thank you.
Thank you. Diane, any questions?
I have no questions. Thank you.
Okay, and I have no questions either. Mr. Neufeld, bear with us 1 second while we pull up your brief, please. Okay, Mr. Neufeld, when you are ready, please.
Thank you. Sorry, I just was okay. I wanted to check something. The issue, of course, I think you can already see, we do have a different rent. This is a property that chose to leave the premises when they could and replaced. Now, our information is that the deal was cut prior to the reference period. In that there was a meeting, the decision was made, and that the intervening period when the new tenant took possession, which was November, is the fixturing period, which is 6 months on the nose. So that is why we feel that there's a good deal of reliance to be made on it. It is at $13.80. It is less than was paid in by the previous tenant, and it might be an indication of the softness in the retail market during COVID. But it is a good, valid indicator of a very current lease deal for consideration. Our vacancy rate varies slightly, same comments as before. So does the shortfall. And bear in mind that shortfall is related to the quality of the building. The first one you heard today was low because the building's low quality. These are higher, cost more to maintain. Shortfall is going to be a bit higher, and that's I think is the problem with using a model that an old 1950s warehouse is not the same as a 1990s big box outlet. Other than that, the cap rate in this case, this was an indication of the softness of the market in the big box. All one has to do is do a Google search, name the retailers that closed up during COVID, and it's a big long list. It was a bad time, and we have a actual market sale showing a decline, and we have a pessimistic outlook on the marketplace, proven turnover, and the number we have on is a fair reflection of those issues. softening of the market. I'll make this summation as well to save some time. The impact of COVID, and I hate beating this to death, but the strongest impact has been on office and retail. And each of these impacts has been set by the external factor of the tenant who's leasing. So an office tends to have 5-year leases, and because that's the way office runs. Retail tends to be a 10-year lease, usually because the tenant in there would like to amortize their improvements, and they're working on a 10-year plan. So what will be happening in the future with retail is where a retailer had the money to survive, they're going to be making plans at the end when their leases are up. Where they didn't have the money to survive, they closed their doors. Retailing will change, and the impacts will be seen over the next 5 years as the leases expire. And the market knows it. We know it. Brokers know it. There's going to be an adjustment. And a lot of the conversion, both of office and retail, has been to multifamily, which is performing very well for investors. And I mean by very well, not saying great returns, but in comparison to the losers. The concept is simple. We had an already weak market that was given a lethal blow by an external factor being COVID, and it showed how soft it is. That's why we're not bullish on retail. Thank you.
Thank you, Mr. Neufeld. Ms. Martins, do you have any questions of the appellant?
Just one. Of the properties that we've looked at today, this is the only one that actually had a vacancy issue, yet it's got the lowest vacancy. Is there a reason that you didn't go for any type of vacancy on this one instead of working it in the other factors?
Well, you would have it's just basic theory. If you have a vacancy that you can track during your period, you would use that. If you have a vacancy you know is coming up and a big problem, you deal with it in the cap rate. You know, it's an expectation. You know a problem's coming, it's a cap rate problem. The problem's already been proven, it's a vacancy rate. And in this case, we also have the evidence of a lower rent that was achieved. So all these factors, my decision would be, as was the person who wrote this, would be that this is a cap rate factor.
Thank you.
Anything else, Jennifer?
No.
Thank you. Gail, any questions of the appellant?
No, I have no questions. Thank you.
Thank you. Diane, any questions?
No questions, thank you.
And I have no questions either from Mr. Neufeld. Any requirement, I believe, Mr. Neufeld, you did your summary. Jennifer, any requirement of a summary?
No, thank you.
Okay, thank you. Okay, so that concludes 1520 Regent Avenue West, and I believe that's it for you, Mr. Neufeld. Thanks for appearing, and you'll hear from us as soon as possible.
All right, bye.
Thank you. All right, Jaswinder, I think we're taking a recess for, how about I say 7 minutes? So we'll come back at 2:11 by my clock anyway. And we'll proceed with the last two on the docket. Thank you, Jaswinder.
Your lines, Chair.
Thank you, Jaswinder. I will now call the hearing back to order. Next property on the docket is number 4, and it is 2023 Realty Appeal. The address is 1560 Regent Avenue West, and my understanding is there's a non-cooperation request by the assessor. Is that correct, Ms. Martins?
Yes, it is.
Okay, thank you. Okay, shall we, Ms. Martins, would you mind reading the property into into evidence and then proceed with your request for non-cooperation.
Sure thing. It's roll number 090076222100, 1560 Regent Avenue West. And we'd like to request that the burden of proof be placed on the applicant for non-cooperation, section 53(3)B of the MAA, and if a reduction in assessment is ordered, that it follows section 54(3.2) of the MAA.
Thank you. Thank you. And would you like to proceed through your evidence of receipt or non-receipt or non-compliance?
Go to page 8. We have the information from Canada Post. And then on page 9, we've got the tracking number on there. Page 10 through 19. Yes, page 10 through 19 is the mailer, like a copy of the mailer that was delivered.
Okay, anything else, Jennifer?
Just on page 12, it shows the mailing address up top. That's
Okay.
it. Thank you.
Thank you. Does the applicant have any questions of the evidence presented regarding the non-cooperation request?
Sorry, Mr. Chair, I have to sworn in the applicant.
Pardon me?
I have to sworn in the applicant.
I'm asking the applicant if they have any questions regarding the evidence presented by the assessor.
Mr. Chair, I have to sworn in the applicant before.
Oh, I'm sorry. Sorry, Jaswiner. Yes, go ahead.
Thank you. Mr. Applicant, please state your full name.
Christopher Mason.
Thank you. Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
Yes.
Thank you.
Good afternoon, Mr. Mason. Do you have any questions on the evidence regarding the non-cooperation request presented by the assessor? Okay, I'm having a difficulty hearing you. Sorry, sir. What was your reply?
I don't have any response to the non-compliance.
Okay. I guess I'll ask you if you're in agreement or disagreeing with the request.
Well, I personally didn't receive it as the agent on this file, and it looks like it was delivered to the head office, and the client didn't respond or communicate with us. So we haven't had any compliance from that perspective. So there's not really much evidence for me to dispute that. I would ask that for some leniency on it, just due to COVID and such, and that we do kind of move forward to make sure these applications are filed in due time.
Okay. Thank you. Gail, do you have any questions of the assessor at all?
No, I have no questions in regards to delivery of the item. The evidence, I've reviewed the evidence that it's there that it was delivered.
Okay, thank you. Diane, any questions?
No questions, no.
Okay. And my understanding is Mr. Mason is has no questions regarding the request from the assessor. Okay, and I have no questions either. The panel will go in camera now. So we'll recess while the panel can discuss the evidence presented regarding this non-cooperation request.
Yes, Mr. Chair. We align, Mr. Chair.
Thank you, Jaswinder. I will now call the hearing back to order. The panel has discussed the evidence presented by both parties and is in agreement that the request for non-cooperation be allowed. So, Mr. Mason, the onus is going to be on you. You're going to present first with that decision made by the panel. And just please bear with us while we find your docket, pardon me, your brief. And I'll let you know when we're ready to go. Okay, does everybody have it?
Yeah.
Okay, Mr. Mason, we have your brief. If you wouldn't mind introducing the property, all the details about it, go through your brief for us, please.
Give me 2 seconds. I'm just trying to.
Sure. Take your time.
So this property's roll number is 09007622-100. The premise address is 1560 Regent Ave West. And the appeals for the taxation year for 2023. And as Duchamp McMillan, I represent Toys R Us. So basically, our review kind of tried to stick within the framework of the city of Winnipeg's assessment model. And we identified some concerns with the use of the property coding as a commercial retail warehouse, and identified some concerns with respect to the type of properties that are generally included in those, such as Costco's, Home Depot's, and Walmart's, and presented evidence to support that Toys R Us, unlike those locations, suffers from more vacancy, but also higher risks associated due to the nature of the business and the lack of essential need for the product throughout the pandemic. And this location, relative to neighboring sites, and I referenced 1570 Regent Ave West, which is considered a neighborhood shopping center and does benefit from higher vacancy and also shortfalls and a higher cap rate on the assessed value. Despite the different ownership, it is otherwise just an extension of the Crossroads neighborhood center in that particular market. And we also looked at the rent associated with it relative to other retail locations. In more particular, the other location on the docket, which we included, was 1445 St. Matthews, which has a much lower rent associated with it, and in around a range and closer to $10 a square foot. So what we're looking at from the framework of the assessment model is to change the property coding from a commercial retail warehouse, which is obviously not the case for this particular location. It's multi-tenanted. It doesn't have the same essential benefits that would be recognized through a Costco or a Home Depot. And if I can put you to Schedule A of the essential retail items such as, if you scroll down,
Which page number, sorry?
it would be page 5.
Thank you.
on the docket. And if you look at what's essential and what's not essential in terms of products through the pandemic, you got baby items such as diapers, baby bottles, and other infant feeding, nursing. Children's toys, books, and children's clothing are not considered essential. And the argument is that a toy store shouldn't be given the same allowances as a Costco, a Home Depot, or a Walmart, because they're simply not an essential service, and people are just generally moving away from spending money on these on toys and non-essential products, because there's so much uncertainty around the market, but also level of incomes and employment. And other concepts with this particular location, there was a fitness location. These were generally shut down throughout the pandemic and suffered significant levels of vacancy, and and higher risks associated with it that should be reflected in the cap rate that we're asking. And like I said, I most of my arguments are founded on the concept that they've completely misclassified this Toys R Us as a warehouse. It simply doesn't compare or compete with the likes of a Walmart or a Home Depot or a Costco, which were all essential services throughout the pandemic, and that you can't keep them on the same framework. And two, relative to the neighboring parcel at 1570 Regent, which is classified as a neighborhood shopping center, this location is not benefiting from the same, despite it being multi-tenanted, it is not benefiting from the same vacancies and shortfalls and cap rates that were afforded to the neighboring properties. So I've highlighted some picks in Schedule B, which are on page 9. And you'll see that within this location, there is a Part Source, a Toys R Us, a Planet Fitness, and a Dollarama. And then you have in the distance, you have a Staples and the neighboring sites. And then on page 10 is an aerial view of that same facility. So you see at the front that smaller building, and this is on page 10 of the brief. You have the Part Sources, that small block in the front, and then the Toys R Us is the bigger square on the right, and then you have a Planet Fitness, and then the Dollarama within this facility. So on the valuation parameters at this location, the city of Winnipeg applied an average rent of $13, and throughout on the different levels of this particular property, that $13 is not indicative of what other retails are being captured in that area. And
Mr. Mason, I'm sorry to interrupt, but we haven't seen the assessor's evidence yet. So if you would leave your comments to perhaps questioning when she presents her evidence.
For sure. Yeah.
And deal with your workup, please.
Yeah.
Thank you.
And I think that would conclude my presentation on the evidence side of things. What we're asking for, I don't believe it to be unreasonable. And Toys R Us has gone through significant issues in the market. They've liquidated all their U.S. assets. And in 2018, they had filed for bankruptcy in the Canadian market, and have continued to struggle with online competitors such as Amazon, and even retail storefronts such as Mastermind Toys. So Toys R Us is kind of a thing of the past. It doesn't necessarily represent anything of a big box type profile that the property coding that City of Winnipeg has assigned to it. So we're asking for the valuation parameters associated with the neighborhood shopping center, and a higher cap rate, which we included the 7.55, which was indicated through the valuation model at the higher end due to the level of risk and the diminishing returns from our Toys R Us.
Okay, thank you. Regarding that workup, are we looking on the last page of your presentation? That's your requested value. Would you mind going through what the rent is and the vacancy and all that kind of thing?
Yeah, so on the brief, and I do apologize because I just realized today that I didn't include a recommended value or a recommended mock-up, but I did in the title on the second page of my brief. I did put in a recommendation in terms of what we believe the vacancy should be increased to based on the City of Winnipeg's shopping center rates. And then the vacancy rate should be increased to 5%, and the shortfall should increase to $9, and then the cap rate should be $7.55%. And then the adjusted rent should be $10.62, which is comparable to the other alternative Toys R Us in the City of Winnipeg at 1445 St. Matthews, which is included in Schedule F of the brief. And the recommended value would be to reduce it from $17,204,000 to $11,412,000.
Okay.
Sorry, I'm a little confused. The workup that can I ask a question yet?
Yeah, let's get this cleared up. Yes, please.
So the workup that you put on your page 14 for 8,278,000 at 53,308 square feet, that is not for this property?
That was just, I included that as evidence to support the $10.62, which is the $10.62 rent.
Okay,
which
so
is
you
applied.
So you did not include a workup to how you came to 11,412.
No.
So you don't have an NOI, you're not telling us the cap rate, you're not telling us anything on this one.
I did, as I mentioned on page 2, I have included a vacancy on it, and you know, you can take my word for it.
Okay.
That when you do actually use the 1062 rent and you apply the vacancy within the docket and the shortfall as well as the cap rate, you do get to the value that I'm suggesting.
So 1062 rent on 53,308 square feet, or a different amount of square feet?
If you look on Schedule D, where it says 1560 Regent.
What page is that? Sorry, I'm just a little confused right now.
Yeah, I do apologize. I looked at it today and I got confused as well. So
Okay.
it was kind of a last minute docket. I expected this to
Okay, you know, it's okay. We'll just leave it at that. That's fine.
Yeah.
Thank you.
So on page 13 of the brief, you'll see that the original mock-up from the assessor includes the weighted average rent and then the different areas, and then you see the income.
So it is 92,676 square feet, this unit.
Yes.
Okay, thank you.
Sorry, Jennifer, I thought we would try and, I wasn't sure what was going on here, so I thought we would deal with it ahead of time as Mr. Mason has presented, but and then Diane asked the questions also about where the evidence is presented for this subject property at 1560 Regent Avenue. And to be honest with you, I'm still a bit confused. Okay. Just bear with me 1 second. Okay.
Can he give us the actual numbers?
Yeah. Shall we go through that?
Hang on one second. Can I just ask quickly? So if,
Of course, go ahead, Jennifer.
so with an area of 92,676 square feet and a rent at $10.62, that would give us the income of 984,219, correct?
Correct.
Okay, and then we've got a 5% vacancy.
Yeah, which results in a vacancy loss of $49,211.
Okay, and then a shortfall of $9. That would be 41,704.
Correct. And then there's the expense ratio, which we're not contesting, which is the standard 3%, which is used across the board.
Okay, and then the
$28,050.
NOI would be 865,254.
Correct.
And then
cap rate we're using?
7.55 for the cap.
And I was using 7.55 for the cap, which results in 11,460,000.
Okay,
Thank
So I
you,
think-
Jennifer. Appreciate that.
no problem. Okay,
Jennifer, any questions of the appellant?
just one quick, just for clarification. So the rent that you're using on this one is the rent that was applied to the other Toys R Us, correct?
Correct.
As it is owner occupied?
Yeah, both these locations are.
Okay. What about the rents? Do you have rents that you're receiving from the other tenants or no?
I don't have the rent roll for these locations. I endeavored to get it from the client, but they did not respond.
Okay, perfect. And no, that's it. That's the extent of my questions. Thank you.
Thanks, Jennifer. Gail, do you have any questions for the appellant?
Just what was the NOI then that you're proposing? The NOI?
984, or sorry, the NOI would be $865,254.
Okay. Okay, thank you.
Thank you.
Diane, any questions?
No, I'm good now.
Okay. Mr. Mason, I'm going to ask for a summary of what you presented. Sorry. I've got the NOI. Would you mind providing the vacancy that you applied? I'll go through them one at a time.
Sure. The vacancy I applied was 5%.
Okay. Expenses.
Expense ratio is 3%.
So you're accepting the city's parameter on that. Okay. Okay.
And then the shortfall is $9.
Okay.
And then the capitalization rate is 7.55%.
7.55. Okay. And just to follow up on Gail's question, the rate you're using is your comparing the other assessed value rate of a different Toys R Us. Is that correct?
The rent rate, exactly. So I used, because they're both owner occupied, I used the 1062 across the board for this one as it's applied to 1445.
Okay. All right. That's all my questions. Okay. So Jennifer, bear with us and we're going to find your brief for 1560 Regent Avenue West. And I'm in here. Okay, when you're ready, Ms. Martins, please.
Thank you. So for the rural year of 2023 with a reference date of April 1st, 2021, we have an assessed value of $17,204,000. This is a commercial warehouse. We have a range of effective year built from 1982 to 2000, and the wall heights are from 19 to 27 feet. We have a plan area of 81,004 square feet. On page 4, we have our workup. We have a potential rent of $1,236,000. $1,016. With a vacancy of 4%, expenses at 3%, a shortfall at $6.50 per square foot, giving us an NOI of $1,126,882. We've applied a cap rate of 6.55%, which gives us our $17,204,000. Once we go past all of the mailer information, there is a picture at the back, but I think the pictures in the appellant's brief are much better. Okay, that's everything.
Thank you to the assessor. Mr. Mason, any questions on the assessor's brief presented?
Yeah, just on the rent supplied there. The assessor includes a list of, I think it's 4 different rents within the area. And I guess the question is, you've got rents from 1988 to 2014. And the rents applied to the subject property are anywhere between $13 and $15, but you have a new rent on August 1st, 2020. Is there a reason why the rents are so high and why you're not applying a rent that's more indicative of this $10.25 that we see from the most recent lease in the market at 1540 Region Ave?
The rents that are applied are model, were applied by the model. But if you're looking at the different properties, that one is actually the most similar to the subject property. So that would probably be the most applicable rent that is of the comparables. But it isn't something that I handpicked and put in. It was done by the model.
And then on the property coding, neighborhood centers are typically multi-tenanted locations greater than 30,000 square feet. Why is this one kind of batched in with bigger box locations that are tenanted, such as those Walmarts and the Home Depots, and not considered part of the shopping center?
I'm not really sure why it is. And there is some flexibility within the different parcel use codes that we have. So there, you do have a point with this one.
I have no further questions.
Okay, thank you, Mr. Mason. Diane, any questions of the assessor's evidence presented?
So Jennifer, you just said something about you agree with his to make the change to the retail. Is that what you're saying? The code, well,
there's a lot of flexibility in it, and it depends on who is applying it and how it's being applied. And sometimes there's overlap between whether this should be considered a neighborhood shopping center or a retail, or whether it should be commercial warehouse, because there are a lot of similarities. So he does have a point. It could be considered either way. It just depends on who's entering this into the system and what their interpretation is.
Okay. Thank you.
Thank you. Gail, any questions of the assessor?
Yes, so if that was changed, if the description of it was changed, what would that trigger? Can you describe to me what it would trigger, Jennifer, as to assessment changes?
Actually, I do have a workup that I did in comparison. Would I be able to email that in and as a submission?
The question is we're dealing with the current assessment, and this is the evidence that's being presented as developed by the assessment department. So
it's okay, I can speak to it. The rent would be adjusted slightly
Are you comfortable presenting this to provide an alternative to the assessed value?
Yes.
You are, okay. Okay, then proceed. I wonder if it would be better if we could, Jaswinder, get a copy of maybe, is it a workup that we're going to be looking at?
Yeah,
With
I have.
revised parameters?
Yeah.
Would the panel members and also the appellant be comfortable in seeing it in an email?
Yes.
Diane,
Yes,
Gail, Mr. Mason?
Yes.
Okay, so Jaswinder, I think we'll have Miss Martin's email it into you, and then hopefully you can put it up to us on our SharePoint and also share it with Mr. Mason before we proceed with Miss Martin's alternative workup.
For sure, Mr. Chair.
Okay, so we will, I think we better recess while this procedure happens, and then we'll come back when the detailed workup is received by all parties, okay?
Yes, Mr.
Thank
So
you.
which email should I send it to?
You can send it to the Board of Revision email.
Okay.
Thank you. We are live, Mr. Chair. You are mute.
Thank you, Jaswinder. Okay, I'll now call the hearing back to order. We're dealing with 1560 Regent Avenue West. The assessor has just provided us with a revised workup of the property. Am I being accurate here, Ms. Martin?
Yes.
Okay, and before we start, would this be your recommendation for the assessed value of the property?
Yes, it would.
Okay, you mind going through it with us? And then we'll discuss it with Mr. Mason when you're complete.
There's you'll notice there's a slight adjustment to the potential rent, and it goes to 1,144,694, and the vacancy would now be at 6%, and the expenses would stay at 3%, but the shortfall would be $7 per square foot, bringing an NOI of $1,004,808, with a cap rate of 7.8, would bring the value to $12,882,000.
Okay, 808 and a revised cap rate of 7.8. Okay. Mr. Mason, have you ever had an opportunity to look at this?
Yeah, I mean, I think it seems reasonable. I was going to question the shortfall and the rents, but I think the higher adjustment on the cap rate probably captures some of that risk that was originally discussed for the lower rents and the higher shortfall. And to me, it seems more reasonably in line with what my expectations with what the value would be on this property.
Okay, are you in agreement with this? I'll call it a recommended value by the assessor after the new workup?
Yes.
Okay, so the appellant is agreeing to a revised assessment of $12,882,000. Before we proceed, I would ask, Diane, do you have any questions on the revised value?
I do, and we're also revising the code. Pardon me?
Yes.
Okay,
And
thank you.
Just before and what is the revised code on it?
It's moving it to retail.
To retail, okay.
Okay. Okay, and Gail, any questions?
so that is described as a change in code in a
No.
set.
It's not changing the code, it's changing the use code, not to be confused with it's still a 60T.
Right, it's still 6T. So my question is whether that is required to be, that change in the use code is required to be a decision of the board.
No.
Okay.
Gail, we'll decide that in camera, okay?
Okay.
Yeah, I know, I see, I know where you're coming from, but yeah, the assessor has detailed the reason why she changed it, and yeah, we'll deal with it in the decision, okay, in camera.
Yep.
Yeah, okay.
Thank you.
And so I don't think we have any requirement for a summary. We've got a recommendation submitted by the assessor, agreed upon by the appellant. So I think that concludes 1560 Regent Avenue West. Thank you. Okay, Miss Martin, next property on the docket is going to be 1445 St. Matthews Avenue.
Yes.
This is item number 5 on the docket, our final property on the docket. And we do have a non-cooperation request by the assessor. Would you mind, just bear with me 1 second while I get to that property, please, to Jennifer. So we're dealing with 1445 St. Matthews Avenue. We're dealing with a 2020 realty appeal. And the assessor does have a non-cooperation request. Would you mind reading the property into the record, Miss Jennifer, please, and detail your request for the non-cooperation?
Sure thing. This is roll number 13000334000, 1445 St. Matthews Avenue. This is for roll year 2023 with a reference date of April 1st, 2021 with an assessed value of $8,278,000. And again, I would like to request that the burden of proof be placed on the applicant for non-cooperation from section 53(3)(b) of the Municipal Assessment Act. And if a reduction in assessment is ordered, that it follows section 54(3.2) of the MAA. If you look on page 8, we have the scan delivery date and signature. The signature was unavailable, but we've from Canada Post. On page 9, we have the tracking information with the tracking number. And page 10 through, I believe it's 19, we've got the information, a copy of what was sent. And that includes on page 12, the mailing address up at the top.
Okay. Thank you, Ms. Martins. Mr. Mason, any questions, comments regarding this non-cooperation request?
Oh, it follows the same sentiment as the last location. We endeavored to get this information and it wasn't submitted, but again, asked for some leniency on it. And I know that their office was generally working remotely, so it may have got lost at some point throughout that process. So,
okay. Does Diane, do you have any questions of the assessor?
I do not.
Thank you. Gail, any questions?
No, I have no questions. Thank you.
And I have no questions either. Jaswinder will recess and go in camera to discuss the evidence presented by both parties and come to a decision on the request for non-cooperation.
Yes, Mr. Chair. Be alive, Mr. Chair.
Thank you, Jaswinder. I'll now call the hearing back to order. The panel has discussed the evidence presented by both parties, and it is our decision to allow the non-cooperation request by the assessor. We've got a little bit of a different circumstance here, I think. Mr. Mason, that would mean that you would go first, but the assessor has submitted a reworked income approach to the property. So, so you might be in agreement with that reworked value. So perhaps you could just present your a quick overview of your evidence, and then we'll deal with the assessor's evidence, and they'll proceed from there. Would that be agreeable with both parties?
Yes.
Okay, Mr. Mason, if you'd like to just quickly deal with your evidence with your brief, just bear with us. But just a quick overview, and then we're going to have Ms. Martins present her evidence, okay? Her reworked evidence.
So similar to the last one we had discussed, there's concerns about not so much the rent on this one, but more or less the property coding on it and how it's being lumped and comparable into the commercial retail warehouse space with the likes of Costco's, Walmart's, and Home Depot's and other larger big box format stores. And this particular location and Toys R Us specifically has undergone significant issues over the course of its life, and most recently in the last 5 years, where there's financially distressed organization with respect to the sale of tours and competing forces from online stores such as Amazon and such. But the gist of it is that we're trying to work within the framework of Winnipeg's assessment models, and we've identified a concern of ours that doesn't necessarily reflect the vacancy and cap rate that would be associated to this particular asset. And we presented a value within our brief to reduce it from the $8.2 million to the $7 million, and to a $7 million or a value in around that range. And it looks like, I guess that in summary, that's basically it, was just to get a property code change on it. So.
Okay. Could I ask, do you have a workup for this, your requested value?
Yeah, so it's not included, similar concept. I had missed putting that in, but I can rhyme off what I do have it worked up on Excel in front of me, so I can kind of rhyme off what the net income was based on what I was suggesting.
Well, you know what I'm going to suggest is that could you give us the value you're requesting, please? Okay.
So I had requested $7,084,000.
708400. Would the panel members like to know the NOI and the cap rate?
Not at this point.
Okay, Diane. Gail, you okay for now? And then we'll have.
Yeah. The information is noted in his presentation on the second page. The cap rate that he used.
Okay. Yeah. All right. Okay. So Jennifer, I think we'll proceed to your evidence. Okay. And just bear with us here, and we'll find your revised workup. Where are we? Let's see. Okay. I think I've got it. Okay, Jennifer, when you're ready, would you mind detailing the property and roll number and everything, and then for the record, and then we'll work through the new evidence you presented based on a revision of your assessment.
This is roll number 13000334000, 1445 St. Matthews, for roll year 2023 with a reference date of April 1st, 2021. The current assessed value is $8,278,000. It was built in 1989 with 27-foot wall height. We do have a leasable area of 53,308 square feet. And if we look at the workup, the new workup, we've got the retail warehouse section with a rent of $11.23 with the storage / mezzanine area, which it's storage. We just class mezzanine in with storage area for reduced rent with $4.31. That gives us potential rental income of $520,107 with a vacancy loss of 6%, with expenses of 3% and a shortfall rate of $7 per square foot. That gives us an NOI of $488,800 with an overall capitalization rate of 7.9. That would give us $6,187,000.
Okay, just to confirm, that's your revised requested assessment value on 1445 St. Matthews Avenue.
Yes, please.
Okay. Mr. Mason, any comments?
And no comments.
Do you accept that revised value?
I do.
Okay. Now, Gail, any questions of the assessor?
No, I have no questions at this time. Thanks.
Okay, thank you. Diane?
No questions at this time.
Okay, my question is to Jennifer. So we've gone down from, it was the original assessment was $8,278,000. And the reason now what we've done is used a different property class code.
No, used a different
Usage?
usage code, not class code. The class code remains.
Right. Yeah, okay, sorry, that I misspoke there. So you've changed it to strictly retail, not retail warehouse.
Yes.
Okay. And you've gone, no. Okay. And as a result of that, no, I won't even ask that question. I'll leave that alone.
Thank
Okay. And that revises the cap rate significantly upwards. And okay. And the NOI's changed, right? Okay. Okay.
Using the model to get a value.
Yeah, that's right. It's the model value, right? Yeah. Okay. Okay. So any requirement for summary, Mr. Mason, we understand your position. I didn't ask you for your net operating income or the parameters of your workup, but I think we'll just leave it at that. You did provide us with a requested value, but then you said that you agree with the assessor's value at $187,000. Could you confirm that, please?
I confirm. Yes.
Okay. Okay, thank you. Okay. With no other questions, that does complete our docket today. And that completes 1445 St. Matthews Avenue. Thank you to both parties for appearing. Thank you.
You guys.
Okay.